Welcome back to EDS, and in this video I'm going to show you what simple, clean and easy trade management looks like. Over the past couple of weeks we have had to make some adjustments to our positions, but this week everything has gone perfectly in our favor, which will happen most of the time, and I'm going to show you exactly what we've done, which is pretty much nothing. But the important thing is to understand why we've done nothing. So we've got two positions open, GDX and Macy's. Both of those started as strangles. They are still now currently strangles, but there has been some adjustments along the way. So let's just start off with GDX. So GDX right now is a strangle. Our put is at 39, our call is at 43. We are pretty much delta neutral on this position. We've got a negative 0.75 delta, a nice IV rank of 55.4. This is important because if we do need to make adjustments or roll out in time, it's always good to have a nice and high IV rank when doing so, because you will be able to collect more premium when IV is high. And there's 26 days left on this contract, so we will be looking to get out soon at a profit. And let's just take a look at the chart for GDX and see what's been happening. So this is what GDX looks like right now. As you can see, these are our strikes at 39 and 43. Price is pretty much smack bang in the middle of our range, which is perfect for us. Let's open up the options chain. So our original strangle was at 31 and 38. Price is now at almost 41, or it last traded at 41. It is a Sunday right now, which means that if we didn't make any adjustments, we'd actually be in about a $300 loss right now. However, in reality, we're pretty much just sitting at break even, negative $6. That's because there's still lots of time left on the contract. But as you can see, by making the adjustments, we've essentially turned a losing position into a break-even position, and the position is not over yet. We have every intention of getting out of this position at a nice, healthy profit. As mentioned, we've still got 20 something, nearly 30 days left on this position to go. So it started off as a strangle. Price moved up. We just rolled the untested side, which was the put side. We just rolled it up higher and higher, collected more and more premium until it was a straddle, and then we bought the guts, sold the wings, and rolled the whole thing out into the next expiration cycle. Paid $1.50 to do so, and then price moved higher from there. So we rolled the put side again from 36 to 39 and collected even more premium. If you take a look now, we are in this position for $1.27 in premium. However, when we initially opened this position, we were at 91. We had 91 cents of premium. So we actually now have more premium collected on this position than when we initially opened it, and we're delta neutral. Theta decay is going to start getting very aggressive over the next week or two, and we will be looking to get out at a nice and healthy profit. So that's GDX. Let's take a look at Macy's. So Macy's last traded at $14.96 a share. Again, we are practically delta neutral on this, a positive 9.42 deltas, a very nice and high IV rank of 71, which will come in handy if we do need to make any further adjustments. And again, still 26 days left on this contract. So this is what Macy's looks like right now. We were whipsawed quite a lot, as you'll be able to see from the order chain here. However, we're pretty much delta neutral on this position, and there's nothing to really worry about. So we started off with a strangle, as we always do, at 15 and 20. Price moved down, so we rolled our calls down, collected a premium. We then rolled our puts down a little bit, which is not something that we do, because our put side was the tested side. However, we were getting a really cheap price to roll the puts down, so we made the adjustment. We then rolled the call side down further. At this point, we were in a straddle, so then we bought the guts, sold the wings, but we actually sold the put side higher than the straddle put, which again is something that we don't typically do. However, it worked well for us in this case. We then rolled the puts even higher, and then we bought the guts, sold the wings, and rolled the whole thing out in time as well, and paid a small 36-cent in credit to do a debit to do so, and now we have 40 cents left of premium in this position. We originally had 57 cents, now we have 40 cents, which isn't a bad thing. We have had to make a lot of adjustments. We are currently down $33. Our open P&L right now is negative $33. However, I'll take negative $33 any day of the week. We've been whipsawed all over the place. We had to roll down, roll up, roll out in time. And in hindsight, you might be thinking that, it might have been better just to leave the position, as it was. However, I disagree, because without the adjustments, or even with the adjustments, you don't know where the market's going to go. Our original put was at the 15 strike, and the price right now is still below 15. So without the adjustments, we probably would be in a worse off position. In this case, price did come back a little bit, but what if it didn't? And what if it still doesn't? What if it continues to go low? Nobody knows where the market's going to go, and our job is to simply just follow the market and stay in business, and that's what we do. So that's basically the two positions, and those are two good case studies of how to basically manage any position. This is what you want to do for any position. It doesn't matter what it is. This is specifically for undefined risk positions, naked positions. You do not want to do this for defined risk positions. The mechanics are not the same for defined risk positions, but undefined risk positions, this is what you want to do, and most of your portfolio should be undefined risk positions anyway. So with that being said, you do need to, of course, know how much buying power you should be allocating to your positions. This is a very small account, so we are slightly more aggressive, but you do need to know, and if you have a larger account, then you absolutely should be keeping your position sizing in check, because in a black swan environment, you can't always make adjustments. Just due to the nature of a black swan event being a black swan event, the only real way to protect against that is to have small positions, or to size your positions properly. And so we've created a free position sizing template that's available for everyone to use. The link is in the description. And the way it works is you enter in the size of your portfolio at the top, say if it's $25,000, and then below you enter in the current VIX level. So let's just say if it's 34.7. Now everything will be calculated below for you automatically, and it's calculated dynamically based on the VIX level. So when there's more volatility in the market, our edge is higher, the chance of a black swan event is lower, so we can be more aggressive, and all of this will dynamically do all the calculations for you. As long as you stick to this, you'll be absolutely fine over the long run. If you do want to learn in more detail about what we do and how we do it, click on EDS Premium. The link will be in the description, and get yourself signed up. Inside, you will have access to our portfolio that will allow you to see the positions that we place, how we manage risk, how we make adjustments. There's a full course as well, so no prior knowledge is required. We will teach you everything that you need to know from start to finish. And if you get stuck at any point, you can simply just speak with myself directly or with other like-minded individuals. It's a private community. There's a 100% money back guarantee, so once you have been through the full course and followed some of our trades for at least 6 months, if at that point you are not profitable, then we will work with you for free until you are, or you can simply request a full refund. So it's completely risk free. It's $9.99 a month to join right now. The price will be increasing. However, once you're in, the price is locked in. You don't need to worry about future price increases, so you are rewarded for getting in early. And the aim of EDS Premium is to teach you the skill. We do not want to keep you dependent on us. We want to give you the skill, and once you've learnt it, no one can take it away from you, and you can take it with you for the rest of your life. It's a very powerful thing to know, and we aim to get you to that point of where you are completely self-sufficient within 6 to 12 months. Of course, you are always welcome to stay and be a part of the community, but within 6 to 12 months, you should be good to go. So with that being said, I will see you guys on the inside.